So the first question is, what is the relevance of Article 7, business profit? So when you look at business profit, these are something which can be either dealt with in Article 7 and Article 5, or maybe something which are provided in some of the other articles. For example, if a company is into consulting business, the profits it earns may be taxable under Article 12, royalty or fee for technical services. Now, even though it's a consulting business, the profits are business profit for the person who is receiving it. The taxability is specifically dealt with in Article 12. In that case, the provision of Article 12 would first have precedence over the provisions of Article 7 read with Article 5. However, if Article 12 itself provides that the consulting fees received by the foreign company, if effectively connected to the PE of the foreign company in the source state, has to be taxed as per Article 7 read with Article 5, then that is what you will apply. So in order to ascertain the taxability of business profit, the first thing that has to be seen is whether the profits are dealt with in other article of the treaty. If the profits are dealt with in other article of the treaty, they have to be taxable as per the provisions of those articles. However, like I mentioned, in some cases, those articles may themselves provide that profits which are effectively connected to a permanent establishment have to be taxed under Article 7, read with Article 5. In that case, the provisions of Article 7 will be applicable. But if the answer is that the profits are not dealt with in any other article, the next question is, does the foreign company has a permanent establishment in the source state? If the foreign company has a permanent establishment in the source state, in such a case, the provisions will need to be looked at differently depending on whether there is a permanent establishment or there is no permanent establishment. If there is no permanent establishment, then the taxability under Article 7 would not arise. However, if there is a permanent establishment, then one needs to see whether the profits are either effectively connected or attributable to the permanent establishment. Attributable would mean that the profits have arisen as a result of the activity of the permanent establishment. Now, in a complete business, there may be a head office, a PE, and certain other parts of the enterprise. If from the overall activity, a particular amount of profit is earned by an enterprise, the entire profit cannot be taxed in the hands of the PE. One needs to see what is the economic contribution of the permanent establishment in the overall picture, and then only the profits that are attributable to the PE, that is, which arise as a result of activities of the PE, are to be taxed under this article. In some treaties, there is a clause relating to force of attraction. Now, force of attraction is something which says that if you have a PE and you also have certain other activities in the same source state, and those activities are similar to the activities of the PE, even though PE may not have an involvement in those other activities, the profits of those activities which are similar to the activities of the PE will be attributed to the PE and therefore will be taxed in the hands of the PE. However, these clauses are limited and do not necessarily appear in all the treaties. Now, if the answer to this particular question is that the profits are not attributable to the PE, then these are again not taxable under Article 7. So this means that even when there is a permanent establishment that a non-resident has in the source state, so long as the profits are not attributable to that PE, the taxability under Article 7 would not arise. But if the profits are effectively attributable to a PE, then the taxation will be done as per Article 7. The important thing to note here is that Article 7 does not provide the rate of tax at which the taxation has to be applied to the profits of the PE. The rate of tax is something that has to be seen as per the domestic tax laws of the respective contracting states. But Article 7 would not provide the rate of taxation. Yes, what Article 7 does provide is that how the attribution has to be done. Thank you for watching our video on international tax. In case you want to subscribe to our full course, you can go to the link courses.sortingtax.com. If you are an Android user, you can download our application, and when you go to this link, you can purchase the course here. In case you are looking for a different currency of pricing, you can click on the link given in the description here and purchase the course. Thank you.